What trends are you seeing from FinTech platforms or institutions integrating digital asset yield strategies? Is there anything that really kind of stands out to you?
Yeah, I think tokenization is one trend. So everybody's trying to right now integrate products through smart contracts rather than just a direct database integration. So a lot of guys that are deep in kind of tech, crypto, they are looking into the direct smart contract integration. So smart contracts move assets, reconcile, compute balances, do your accounting pretty much. So they'll try to offboard like that back office and mid office function to smart contracts more and more. I think another trend is right now getting into other markets. So as equities become tokenized, bonds become tokenized, credit becomes tokenized, the capital is looking for that yield slash investment into those products. So if you hold USDC, you not only want to allocate it to our pool, you also want to find, let's say, a stock on chain or a portfolio of stocks on chain, right? So that becomes more like a cross market proliferation becomes a thing right now. So tokenization, cross market proliferation, and yeah, obviously stablecoins, they've been kind of around for a while. So that stablecoin multi-chain capabilities when you don't have to swap from one chain to the other kind of also becomes a thing in the apps. So the end customer doesn't have to think about the gas, doesn't have to think about swapping from Avalanche to Solana, from Solana to Ethereum. So a lot of abstractions on cross-chain interoperability.
Where do you see the biggest infrastructure opportunities emerging over the next year or two? Or is that the interoperability you're talking about?
I think interoperability and cross market, right? So bringing stocks on chain, bringing active portfolio management on chain, bringing indexes on chain, bringing other financial products. Because the spot market pretty much well established, the staking market is well established, the trading markets more or less well established on the venue side. So right now you're starting to look into more of a kind of exotic derivatives markets becoming established, and then you're looking at get into the adjacent markets, right? So, let's say Coinbase, they have prediction markets right now, they have stocks, they have equities, right? So Coinbase is centralized on Base. They have a Base blockchain. On Base, there's also people are building those cross-market applications when you can have access to a single vendor, single platform to different markets, like interactive brokers as an example.
How do you see stable coins and yield strategies evolving into standardized financial products?
I think a lot of that is going to get automated as well into the T-bills deposits. So tokenized T-bills, one way or the other. That's going to be kind of layer one. That's already pretty well established. Layer two is going to be credit markets, like Morpho, becoming more and more. And layer three is going to be more of an active management when you're going to be finding and balancing across, let's say, credit market, spot, trading, providing the best exposure. So I think it's gonna that space is always evolving. Like the active asset management space, it's always evolving. It's not really becoming a fundamental infrastructure, but it's always uh, you always have to be at the edge of technology, at the edge of the market, have an edge of your own.